Friday. It is 9/11/2020. Want to go over our game plan, our thought process. There's good and bad news to this week, to be honest with you. We'll start with the bad. It was a down week. Not trying to hide that. As you can see here, it's the weekly performance. The indexes specifically, so the Russell 2000 and the Dow actually led. So a little more of the value type areas did a little better this week. The NASDAQ continued to struggle, just not because any of these companies are bad companies. It's just they were overbought and people are taking profits. There's nothing really in the news that's really concerning or driving any of this. Bottom line, September is usually a tough month in the market. There's reasons why we backed off risk. There's reasons why we went index based. And that's what I want to show you. So two weeks ago, we took a broad-based approach, meaning we basically said we're going to go all ETF based and we're going to put 20% in cash. And obviously in hindsight, I wish I would have put more in cash. However, I kind of want to show you why I made the moves that I do during those times when I see things overbought, and we'll go from there. So let me just show you a picture of what I'm looking at right now. We'll go. So here is the S&P 500. And anytime I see an RSI get into the 80s, right here, relative strength in the 80s, that's kind of a, hey, back off risk. We're getting a little hot here. So that's what I did. I backed off risk. It was 3 days early, but boy, did it tumble quick. Now we are testing a key level, the 50-day moving average, which is this blue line. Historically, if that breaks down, it is not good. So what I did today, Friday, on a little bit of strength, is I sold into it. So we are now about 65 to 70% invested. I got out of small caps. I got out of mid caps. I sold some financials, which actually were not bad trades for us whatsoever. It's just I'm positioning now to say, okay, we reduced some of the downside. Again, we still lost money. This week was about a 2.2% down week for most clients versus the index, which I'm trying to beat every week, is, again, not a great week. However, my job is to try to beat the S&P 500, which we did. So that's good news. We took the proper steps, but I want to show you something like why we have the process and believe that cash is the position, and why we say during elevated levels it's smart to go ETF based. This is the week in some great names, and I'll be honest with you, now a lot of these names are becoming a little more interesting to me. The Facebook, the Amazons, the DocuSigns of the world, the Lululemon. I mean, a lot of these are great names. I mean, no offense, this was a great report for Lululemon this week. It's just getting caught up in the market volatility. So that's where I, again, firmly believe that cash is the position. Not trying to deny that the fact that I wish I had more in cash at that time. Nobody has a crystal ball. I don't think anybody expected one of the fastest dips over a 4-day period in history. But that's the way the market is right now. It's that volatile. So the good news is this. While many of you might be new to investing, clients, when you're telling me that you're getting killed on a 4.5% dip in 2 weeks, nobody likes that, but we're still doing quite well over the last 6 months. So be patient. I show you this to say, hey, this is how many are invested. Great names, but this is getting killed. Okay, so we are reducing risk. I just want to make sure you understand that. And now this coming week, I'm much more interested in getting into names like some of these. And I need to slowly push in to some of these names to create alpha long term. So the good news is I'm finally able to invest the way I want. For the last several weeks, I've been ETF based and not really interested in a lot of these names because they were overbought. They're great companies, but they were just overbought as indicated by the RSI, which I am a firm believer in. Again, it can go above 70. It can get into the 80s, but it's just not great risk reward. Okay. So we are again about 65% invested. You're like, why not more cash? Because if this holds, which sometimes it does, I need to have some invested. Okay. So that is kind of our game plan to say is next week, I do expect a little more volatility. Now I'm going to show you why I think that. Okay. So this is another positive. Despite it really not being a great week, the VIX is calming down, which again, we started to see a warning sign on the way up with the VIX, which is more of a fear gauge. And that's kind of a warning sign to say, hey, reduce risk, which we did. Now we're going down in fear, but the indexes are not following suit yet, which might mean we might need another 3 or so days. It could need longer. I'm not trying to predict that, but this looks a lot like this. A lot of things tend to rhyme, and it might take a few more days to wash out the weak hands that were doing crazy options without any put protection. Okay. So I want to show that to you that is a positive. So I think there might be a little more volatility. That's why I reduce risk, but I'm really positioning so I can get into individual names. I don't want to be ETF based. I want to be all individual name based because that's where the alpha is. That's where I want basically 30 great stocks and let's ride it. And we're getting closer to that environment where I'm interested in buying some of those names. Not quite yet. Held off this week, and I'm glad I did. Here's a red flag that, again, I feel well situated for this. When the 8-day moving average, the blue line, crosses the gold line or the 21-day moving average, that is not a good look, period. A lot of people will say I'm out completely at that point. Now, we've had a couple close calls recently, which is why I'm a little like, got to have some invested in case this is a head fake. We had plenty of head fakes this week. That's what I want to show you. This week was very, very difficult. Okay. So this is called a gap down. So this basically is the trend starting into the week. We had a gap down, which again usually gets tested, and a couple days later we did, as of yesterday, this was unfortunate. I thought we were going to break out of this and go higher. I didn't add or anything, but there have been some real head fakes in this and very difficult, which when this stuff happens, it's just best to stay out of the way and reduce risk and wait for more confirmation. Right now, this gap down was tested, failed, and lower highs. That's not good. So there's some realism in why I'm saying I like the way we're invested. We're about 65% invested in case we go up, and I have plenty of cash to add into individual names, and we'll do a huge rebalance. But don't be surprised if midweek next week I begin to add into those names, into some individual names. So some more sentiment breadth things that I want to show you. The National Association of Active Investment Managers. This shows the percentage that they are allocated. So this means like 47% is in cash. And usually, I want to kind of give you perspective here. At the end of 2018, where there was a 20% dip, this got down basically to the 50 range. A double touch here. So we're really close, in my opinion, to basically saying, hey, I think people are getting the fear that we need to see. We might need one more flush. I don't expect this. I want to be very clear. The backdrop, in my opinion, is too strong. If price action shows we need to sell more, I have no problem in doing that. But I do not expect that. So don't freak out about that. But could we touch 50? This is just something to keep an eye on. Not necessarily an indicator to do anything specifically, but it's interesting. So the McClellan Index basically advances versus decline on the New York Stock Exchange and collectively, again, going in the wrong direction. not a good sign. So again, you're kind of seeing that I'm taking a balanced approach to say, if we go down, I have room to add and rebalance. If we don't go down, we're going to be okay and allocate it. Okay, so it's a risk reward game. As we keep going lower, the risk to reward actually is better long term. So I need to begin adding into some of these names, which is going to create some volatility. You might hate me for a week, but in reality, you'll like me long term. So hang in there. Just kind of want to show you these things. Put call ratio is another one. This got up into the near 70, 68, and went down a little bit. This is as of Thursday, so there might be a little more volatility there, but we're at least out of the 45 range, okay? So that's basically what I wanted to show you. A few charts, kind of go through a few names. Again, had I gotten into this watch list, this would not have been pretty. There have been a few names that did well, but collectively, if I switch this around, this would not have been a pretty picture. Again, the average would have been much worse than what I was actually in. So we made the right decision of not getting into these names yet, but still it was a little painful, about a 2.2% decline, which I never like, but it's very difficult to time, as hopefully all you know. Joseph Fahmy, a tweet that he puts out, follow him, great guy, great stuff that he puts out. It basically shows more people got bearish, an increase of 6.7%. The week ending 9-9. I bet this might even be a little more extreme. So in short, this is actually what I want to see. I want to see people have a lot of fear to know that it's about put out. All the fear is out. We're not quite there in my opinion, but I don't hate the way I'm allocated right now. So again, a tough 2 weeks. I know this might sound like an advisor just trying to calm you down, but the reality is this. I have been hoping for this for a long time because it actually leads to good things, okay? A lot of new traders learn a lot of lessons in not doing stupid trades, but also it allows the people who are a little more intelligent to get into names that are at a discount. And yes, things are a little frothy still, and that's where I'm thinking we might need a couple-day flush still. It's not going to be a fun week next week. I want to make that very clear, but we need to remain disciplined because if I position into some of these names that are down 20% that's going to be a good long-term play, okay? So hang in there. I will look for confirmation as always, but overall, we are hanging in there. Nobody's losing their tail. Nobody likes to see a 4 to 5% dip. Don't get me wrong, I hate it, but this allows me to allocate the way I want to allocate. So hang in there. There are positive and negatives in the tape. I never like to see, for example, this. I don't like to see this. This is a red flag and why I back off. This below the 50-day moving average, the NASDAQ, which is a strong area, this breakdown is not a good sign. Now we did okay at the close, but it's still very, very shaky. Good things do not usually happen if this breaks and doesn't get back up quickly. And I'm very well aware of that and will react accordingly. So good and bad things on the tape. The VIX going down is a really good thing, but it might just need a little more time, a little more scare. We keep getting these gap ups in the morning session, and it leads to bad things. It's too enticing for people to sell into that, and it's hard to get any traction. So I'm hoping we go hard red Monday, but it's very possible that this 50-day moving average could hold. So keep an open mind. Don't fear the worst at this point because the backdrop is good. Let's be honest. If it gets much worse, don't be surprised if we get a little more stimulus money because it is an election year, and everybody's kind of looking for their party line. Look what we did to enhance stimulus. Whether you're a Democrat or Republican, both sides are going to try to do that. So I don't expect a ton of downside, to be honest with you, but expect it to be swings like this. Like this looked great. It was a unfortunate head fake, and lower we went. So not a fun couple weeks, but we will get through it. We are positioned well. We are watching every second. We will not be able to time this perfectly, but hang in there because we're going to be able to position really, really well into this. And I feel very encouraged long term and even through the rest of the year that this could set up to be a very good thing that this happened. So hang in there. I know it's frustrating. Let me know if you have concerns, but I'm here for you. And we're watching very close. So hang in there. See ya. Have a great weekend. Get some rest. I know I need it. See ya. Bye.